The war between Donald Trump and the Federal Reserve is literally weeks away from hitting a tipping point. With the midterm elections coming next year, Trump's next Fed appointee might just be the wild card that catches everyone offside. While everyone's distracted with the AI bubble and the death of the Bitcoin 4-year cycle, what's happening behind closed doors at the White House will affect what happens in 2026 more than anything else. Today, we're gonna break it all down and shine a light on something no one else is focusing on. Welcome back to Satoshi.
I guess a potential Fed chair is here too. I don't know. Are we allowed to say that? Potential. He's a respected person, that I can tell you. Thank you, Kevin.
Kevin Hassett, currently the White House's top economic advisor, has surged to the top of the list of frontrunners to succeed Jerome Powell as Fed chair. Multiple media outlets and prediction markets now give him strong odds, some estimating 70% chance or higher. But why does this really matter? Under Hassett, many expect the Fed to pivot toward lower interest rates and finally align with the White House's push for looser monetary policy. In other words, this is textbook fuel for hard assets. And already, markets are reacting. Some investors are warning that under a dovish Fed, Hassett could weaken the dollar and stir anxiety in bond markets. They're starting to realize what Bitcoiners have known for a while now. And even banks are realizing how hard the dollar is struggling. It's getting attacked on all sides by a weak bond market, liquidity shortage, and an economy that was supposed to be a boom but has gone side to side all year long.
I think it's actually the more interesting factor is why it's been flat for so long, because the crash itself, like even in the 2017 bull run, that was a fairly smooth and kind of parabolic bull run, but it still had multiple sharp 30% corrections along the way, like several.
Yeah.
And it would just have these V corrections and shoot back up. So it's not necessarily that this one's had really big magnitude. I mean, we touched like 75K back in April, for example. It's not really the size of the corrections. It's more of the length of time of lasting in the state. So the fact that we were 100K in November of last year, and we're after a year we're basically flat. And now we're down to some extent. That's, I think, the more noteworthy item. So I don't really view Bitcoin as crashing. I view it as basically stagnating at this time. I think that's the more noteworthy event. There's a lot of factors that can go into that. I think that liquidity is a factor. So we do have tighter liquidity now. But when you look at kind of broader measures of liquidity, they're really not that bad. And I don't expect them to get that bad. I think we're kind of in the bottoming phase for domestic base liquidity at the current time, and broader liquidity is mostly fine. So I think that liquidity is doing it no favors this particular month. I think there's a broader issue. It's AI potentially sucking some kind of capital enthusiasm away from Bitcoin as kind of the fastest horse narrative. Obviously, gold has had a really good year, and then there's also to some extent the disillusionment with the other catalysts for Bitcoin. And so, for example, one of the most popular questions I got on Bitcoin podcasts in early this year was, what do you think about a sovereign Bitcoin reserve? And I found that the most boring question. I mean, people had to ask it, but I found it, and I even said it a couple times, that it was like the most boring question, because one, as far as kind of the ethos of Bitcoin, I find the decentralized aspects way more interesting than what is the nation state going to do with it. And two, I'd said I'd rather kind of have a price estimate that doesn't include, Uncle Sam buying 500,000 coins. I'd rather be surprised at the upside if that does happen than to factor that all in and then be surprised when it doesn't. Because my view at the time was that, sure, they're going to ring fence the coins they already have, that they don't owe back to someone else. But that any accumulation from there, I think, would probably be marginal at best. And I'd be happy to be proven wrong, but that was kind of my base case, and I would just plan for that. I think a decent chunk of Bitcoiners were kind of really bullish on that outcome, really bullish on a lot of things. And then when those expectations don't really align, even though it's otherwise a pretty good environment for Bitcoin, especially looking over 2-3 years rather than just the 12-month period, you start to get deflated expectations.
In her latest newsletter, macro strategist Lynn Alden argues what many frame as a new trade, fleeing bonds into gold, Bitcoin, and real assets, which is really a continuation of a decades-long trend, even though Secretary of Treasury Scott Bessent seems to be in denial. Seriously, who's in charge of his X account? I don't know. For years, declining interest rates, easy money supply growth, and loose fiscal policy let asset prices inflate. Households, especially the wealthy, saw net worth soar relative to wages and income. But that game may be ending. Interest rates bottomed out, bond yields jumped, and suddenly, bonds, once thought safe, became losers, except to Scott Bessent, who is clearly in denial. Anyway, over 2020 to 2025, sovereign bonds had basically their worst 5-year period of performance ever, according to Lynn Alden. As a result, many investors have chased de-dollarization, piling into hard assets. Hard assets aren't really a hedge anymore. They're becoming the center of investors' portfolios.
The tendency of a government to want to debase its currency over time there's no system that beats that. You can pick dictators, you can pick representatives, you can do anything, but the people, there will be a push toward weaker currencies, and of course that is, I mentioned very briefly in the annual report that the fiscal policy is what scares me in the United States, because it's made the way it is, and all the motivations are to doing a lot of things that can cause trouble with money. But that's not limited to the United States. It's all over the world, and some places it gets out of control regularly, as they devalue at rates that are breathtaking, and that's continued. I mean, and people can study economics, and you can have all kinds of arrangements, but in the end, if you've got people that control the currency, you can issue paper money, and you will, or you can engage in clipping currencies like they used to do centuries ago. Or there will always be people. It's the nature of their job. I'm not singling them out as particularly evil or anything like that. But the natural course of government is to make the currency worth less over time, and that's got important consequences. And it's very hard to build checks and balances into the system to keep that from happening.
So what could go wrong? Here are some things to look out for. First, and most obviously, inflation. If the Fed under Hassett cuts rates too aggressively, he could face backlash for reigniting inflation and eroding purchasing power further. A very real concern to most consumers, especially people in our generation, millennials and Gen Z. A very real concern to most consumers. Second, he will need to retain credibility and confidence in his leadership. If investors sense a politically influenced Fed too aligned with the White House, it could undermine his faith in his independent supervision of the monetary policy. And Hassett's biggest potential pitfall could be asset bubbles and associated volatility. Inflation-sensitive assets, for example, could overheat, while others, like already overvalued equities, could suffer sharp drawdowns.
When you're in fiscal dominance, when debt to GDP is as high as is, you raise rates, you raise deficits, and deficits are stimulative. Oops. If you cut rates, well, especially once inflation's a little elevated, to lower deficits, to cut interest rates, to lower deficits, which is in theory, lower deficits should be non-stimulative or contractionary, you're stimulating by cutting rates. So like, he has a choice of how he wants to inflate, how he wants to be Arthur Burns. And that's what we said at the time. And it's starting to play out. And what your anecdote suggests is The real estate community doesn't understand that yet, but they're gonna soon, which is, how do they want rates to go up? Do they want rates to go up with inflation going up, or do they want rates to go up with inflation going down? Because either way, they'll go up if he cuts rates and inflation picks up, and they'll go up if he raises rates because he's raising rates. And oh, by the way, that makes the debt less sustainable and therefore higher rate on a less sustainable debt. So there are still a lot of people, I don't think, that appreciate that outcome. I agree with you 100%. You said something before that people are finally kind of seeing the bigger picture, right? The fact that everyone and their mother in the mainstream media is now talking about the debasement trade, right? How, like, you and I have been talking about this for what, 5 years, 7 years?
Yeah.
You know, I feel like Bruce Willis, like, come on in, welcome to the party, pal. But it's not a debasement trade, it's a debasement trend. Like, this ain't gonna stop. And oh, by the way, the only way you stop the rates go up with hikes or rates go up with cuts is you devalue the heck out of the currency. And you basically buy down the debt. And provisionally, we've talked about this before, it's on the books. They could do it with gold. It ain't going to happen at gold 4,000. It ain't going to happen with gold 8,000. You know, gold 20,000 is probably the opening bid to have a real effect with that. So point being is, like, I think people are seeing the symptoms, right? Your friend saying, oh, rates went up when they cut rates. I don't get it. That's the girl washing up on the beach at the beginning of the movie in Jaws, right? Like, oh, it's just a boating accident. And then, you know, next comes the poor little boy. You know, and then they're going to catch a shark, right? And they're, you know, 50-year mortgages, or Trump's going to tweet out the Walmart CEO thing. Well, Thanksgiving spending's down. And then they fact check them and they're like, well, there's 6 less items. There were 21 items on the menu last year. There's 15 this year, and they're almost all store brands versus brand names last year. But yeah, other than that, right? That's where they catch the shark and everyone's like, hey, we got it. It's over. And the guy's like, the bite radius on that animal doesn't match the bite radius on the victims. That's not your shark, right? And then finally, we're going to see the shark. And when we finally see the shark, everyone in the real estate business is going to go, oh my God, if they cut rates, we're screwed. If they raise rates, we're screwed. Sell your house now as fast as you can. And, you know, then what? I don't know. But people don't appreciate that they are painted in a corner yet. They know they need to debase, but they don't really get, like, oh.
Back in 2021, the Fed printed money and everything went up. Stocks, NFTs, dog coins, your grandma's Beanie Baby collection. But this time, the system is weaker. Debt is bigger. The world trusts the government and the Fed way less. So instead of everything pumping this time around, it's likely that only hard, scarce assets will possibly rip the hardest. This is the difference between a bubble and a monetary evacuation. And once people realize how broken the money is, they're gonna panic run into anything solid. But while you're securing your Bitcoin future, you need to secure your identity too. Watch this. This is my data broker report. 11 pages. 11. They know every old address I've lived at, phone numbers, family members, even what kind of car I drive. It's insane. That's why today's video is sponsored by Aura. Scammers, spammers, even stalkers can just buy your personal info, and it's totally legal and so dystopian. Aura hunts down the data brokers selling your info, gets them to take it down, and keeps it off automatically. You don't have to go full off-grid Bitcoin mystic and live in a Faraday cage, because Aura lets you keep your modern life and your privacy. Aura has packed it all in. Real-time dark web and fraud alerts, a secure VPN, antivirus, password manager, 24/7 US-based support, and $5 million in identity theft insurance if anything goes wrong. No other privacy service gives you this many tools for the same price. Protecting your Bitcoin in self-custody is totally necessary, but protecting yourself? That's non-negotiable. Go to aura.com/simplybitcoin and take your privacy back. All right, Aura protects you, but now let's talk about protecting your Bitcoin future, because stacking sats gets a whole lot easier when your miners are working for you and not against you. Would you mine Bitcoin if it were as easy as buying it? Then you should check out Sazmining. It's not hosted mining, it's mining as a service that actually puts Bitcoiners first. This is how Bitcoin mining should have always been done. Visit sazmining.com or scan the QR code to learn more and start hashing. While some are still rearranging the deck chairs on the sinking Titanic, it looks like many institutional players are actually starting to react in a big way. Over the last few weeks, we have seen an avalanche of endorsements by TradFi institutions. The CFTC just approved spot Bitcoin trading to help make America the crypto capital of the world.
Matt, crypto goes mainstream. The Commodities Futures Trading Commission announcing the launch of the first government-supervised crypto trading platform. It allows Americans to instantly buy, sell, and finance digital assets. Fox Business's Darren Botello, live in Washington with all the details. Darren, good morning to you.
Hi, good morning, Maria. Of course, right now, as we all know, you can buy and sell crypto online already. But this is the first time, like you said, a spot trading platform is getting the full backing of the federal government. So why does this even matter to investors that the CFTC is backing this new Bitnomial platform? These other platforms are legally operating, but here's the catch, Maria. They're often called the Wild West. Basically, it's buyer beware. We've seen this with the collapse of FTX and customers eventually losing out on huge profits they would have had. Their money stayed safe in the market, they would have had it. Now with this Bitnomial platform, there are stricter standards for transparency, security, and consumer protection to prevent an FTX-style collapse. We spoke exclusively with acting CFTC Chairman Caroline Pham ahead of this new platform going live.
Not only do we want Americans to come back home and to be trading here where they know that they have the protections that they deserve, but again, that means that American companies that are involved in the crypto industry, they're going to want to build here, they're going to want to invest here, they're going to want to hire here. So this is overall a net benefit to the economy.
And Bitnomial tells us ahead of their announcement, the actual launch of the platform is set for next week. Maria?
That sounds cringe when you don't say just Bitcoin, but I'll take it. The CEO of Fidelity, one of the US's biggest investment firms, is apparently a Bitcoiner.
So I don't know if it's because I started early or I don't know, maybe as I get older, I'm just kind of old-fashioned, but like I kind of like Bitcoin. I don't own tons of coins, but I own Bitcoin. And I think it will continue to play a role in the savings hierarchy of lots of people. And it is the gold standard, so to speak, in the crypto world. And it's been around and it's solid and it's persisted and it's a good system. So I'm long-term very comfortable, and I think that that will continue to be something that we will factor into our thinking and our quest to provide options for our customers. And I'd like to be able to be one of the people that continues to make it a little more accessible, because for all of the genius that went into designing Bitcoin, they probably could have used some IDO resources maybe to help more people engage with it sooner.
Bank of America Merrill Lynch is recommending an allocation. The company's advisors will be able to recommend a handful of Bitcoin ETFs from different asset managers. And Vanguard, whose CEO swore they would never change their minds on Bitcoin, now embraces the asset.
Spot Bitcoin ETFs. Question came in, hey, we know you're not offering one. Have you changed your mind? What would it take for you to change your mind? We don't plan to, and we don't, we're not going to change our minds around this unless the asset class changes. Yep. Why? First of all, we don't believe it belongs. Like a Bitcoin ETF belongs in a long-term portfolio. Someone's saving for their retirement. It's a speculative asset.
That's exactly it.
And the funds that we offer invest in asset classes that actually have underlying cash flow. So, like we mentioned stocks, you're buying the forward earnings of a company.
That's right.
And that bond, right,
has coupon and principal payments.
Yeah, you're going to pay me back and you're going to pay me something for lending you the money.
Exactly.
Right, so they both can be valued.
And that's for us, we understand why they would rise up in a portfolio and the role they will play, and we can model them. Something like Bitcoin is just too volatile, and it's not a store of value. It hasn't been. And it's very volatile. When stocks got hammered in recent crises, that Bitcoin went right with them. And so it is speculative, really tough to think about how it belongs in a long-term portfolio.
And even beyond Wall Street, we're seeing worldwide adoption pick up speed. Abu Dhabi just tripled down on Bitcoin with $520 million.
We know in terms of their holdings and when they added to this position.
Yeah, so you can see that they've more than tripled their position right in the weeks and months up to the sell-off. So, it hit a record high in October, and we can see that they've tripled their position during the third quarter. They disclosed a position at the end of September that was worth around $520 million. And we can see that this is really going to be a part of their portfolio going forward. They're saying that they want to diversify it, and they really see it as the digital equivalent of gold.
And by the way, I should correct myself. I meant to say $500 million, not $500 billion. That would be tremendous. But Ben, getting back to you in London, when it comes to the Abu Dhabi Investment Council, just give us a sense of how this holding of Bitcoin fits in with their overall portfolio. What is their investment strategy?
Yeah, sure. So they're an investment unit of Mubadala. They're kind of run separately, but this really seems to be part of the overall strategy by Abu Dhabi and the United Arab Emirates more generally to become a hub for crypto, as well as just to really become a player in the markets. You can see that Mubadala itself also has significant holdings in Bitcoin ETFs. They've set up new funds such as MGX that have done deals with crypto exchanges like Binance, and you can really see that, they see this as an important long-term diversification play.
And how significant would you say Abu Dhabi Investment Council's move into the crypto sector is, not just for this entity, but for the region at large?
Yeah, well, look, it really gives it growing legitimacy. There's been a lot of questions about, institutional interest in it. Is it here to stay, or is it just a fleeting thing? We do see a lot of sell-offs in the Bitcoin ETFs recently as investor sentiment has turned. But it looks like the Abu Dhabi Investment Council is going to be in it for the long term. And this just really gives it legitimacy when a state-owned fund by one of the richest countries is plowing some of the reserve money into this. You can see that this is something that they really believe in.
Right. I think most people have heard of Mubadala, which you mentioned is the Sovereign Wealth Fund. What exactly is the relationship between the Abu Dhabi Investment Council and Mubadala? I know that you said it's a unit of it, but how did that develop over time?
Yeah, sure. So there used to be a separate state-owned fund. They're mostly invested in private markets, particularly in North America. They've since been trying to diversify. A few years ago, just to sort of simplify the management, they were folded into Mubadala, but they're still run very separately. They have their own investment strategy that's different from the rest of Mubadala. And but you can see that both them and their ultimate parent company, they're both very interested in crypto and are looking for ways that they can play this.
So before we wrap up the show, let's bring this home with a special message from our friends at Ledn. If you're stacking sats, you need Bitcoin-backed services you can trust. That's why we roll with Ledn, the global leader in Bitcoin-backed lending. Sign up through Simply Bitcoin for 25 basis points off your first loan. Scan the QR code or click the link in the show notes below to get your discount today. Now, let's wrap up the show. So yeah, the Fed led by someone like Hassett might matter a lot to anyone not holding hard assets, but for Bitcoiners, this could be the moment. The moment it stops being a trade and the moment that we stop feeling like we've been in a bear market all year round. And the moment that it becomes the new default. And if you're not paying attention right now, you might just miss the beginning of the biggest wealth shift in our lifetimes. So get on the boat, buy some Bitcoin, take it into self-custody, because this could be your only chance. If you like this show, smash the like button, hit the subscribe, and drop a comment. Do you think that Bitcoin's about to go full beast mode, or are we all just losing our minds? I'll see you on the next one. Thanks for watching, and remember to stack, slay, and stay bullish, baby.